All right. Hi, everybody. Good evening. Thanks for joining us for our virtual buyer presentation. Here to give you a little more information about how to become a homeowner, how to best guide you through this process. If you're looking to create financial security and build generational wealth through home ownership in 2021, that is what we are here for. We are also going to give you a free gift, the 6 secrets to crafting a winning offer at the end of the webinar here. I'm going to show you how to do that for everybody who's still online with us at the end. And once you know these 5 secrets, you're going to be able to get out there and really jump on the property that you're most excited about. So I'd like to introduce Maryland Real Estate Info and Exit One Stop Realty. We are a group of super collaborative real estate agents that help people to become savvy, educated home buyers. So first up, we have Holly Bennett. I'd like to give her a moment to introduce herself.
Hi, everyone. My name is Holly. I was born and raised in Maryland. I'm a wife and a mom, and I specialize in first-time home buyers.
Awesome. And we also have, oops, I asked you to unmute, my bad. We also have Samuel Thomas, realtor at Exit One Stop Realty. Tell us a little bit about yourself.
Hi guys, my name is Samuel Thomas. I am a realtor at Exit One Stop Realty. I take pride in helping first-time home buyers purchase their first home, and I've done it for the last 19 years. So I like to keep helping them purchase, and if I can be of any service, let me know.
Awesome. And we also have a credit restoration specialist who's going to be popping up in just a few minutes. But until then, we also have Jessica Enfinger with the Powerhouse team at First Home Mortgage. She is our go-to mortgage queen.
Thank you.
Tell us a little more.
So yes, I'm Jessica Enfinger, and we are the Powerhouse team here at First Home Mortgage. And we specialize in mortgages, residential mortgages only. I've been doing this for 18 years, and we work in Maryland, Virginia, DC, Georgia, Florida, and Pennsylvania. So we work with a lot of down payment assistance programs. We're going to get into some of those things today, but we're very excited to be here and to help you guys answer all of your questions.
Beautiful. All right. So together as a group, we've really, our main focus is helping to educate and really inform our potential home buyers to help you get on the right track. We have a lot of people that kind of want to pop up and say, oh, I'm ready. And then we have to be the bearer of bad news of like, oh, actually, you have a little bit of homework to do. So we like to do these educational events. That way, you know what to expect. You're not doing double the work or accidentally, doing things that may set you back on your journey. So to get things started, we're going to give you a quick overview of the whole home purchase process and our steps on how we help you out. So first off, why would you use a realtor? Realtor is a different entity from a real estate agent. Realtors are held to a higher standard of ethics. We are definitely committed to holding your information confidential and helping you get to your goal of homeownership in the least stressful way possible. On top of that, we have the advantage of being Exit Realty agents because we also have a lot of collaboration within our company. We're all here to work together and to get you to your goals. If there's ever an opportunity that there's a house up that we really want to get you in to see, we work together to make sure that that happens for you because we never want an opportunity where you're going to miss out, especially in this market. Every single person is different. Their goals are different. Their background is different. So we want to make sure that we're taking a one-on-one approach with each and every buyer that we talk to help you get to the right place. We're going to work together and identify places online, places that may be within our sphere of influence or network to get you into some places that may not be readily available yet. We definitely have had a problem with inventory in our market. So working together is really one of those best ways of getting you in first, getting your foot in the door, help you really nail down the property that you want. We are still doing open houses, so if there are any events coming up of our listings, we're definitely going to send out the invite and spread the word. If there is an open house that you would like to attend, we're more than happy to go with you as your advocate. And then we also want to be really safeguard, we really want to make sure that we're getting out the best information on our local communities as possible. We're all residents of Maryland. A few of us have grown up here, born and raised, and we're always looking to show people kind of like those cool little areas, the secret spots that you may not have thought about before that may open up other avenues for you for homeownership. But certainly if you have specific needs, you need to be, certain locations you need to stay towards, we're here to help you with that. We're going to be getting into a whole separate presentation with Jessica about building your budget, getting qualified for a mortgage, how to get your credit into a position to purchase. We're going to go over that in a little bit today. So I'm going to be skipping over a couple of slides here, but the basic goal is for us to get as close to that anticipated appraisal price. So we want the bank to agree on a value of a home that you find. We don't want to offer way more than what the house is worth, and then you're stuck with having to come up with the difference to make this happen. How we do that is we look at our local multiple listing service. That's the database where all of the active and coming soon listings on the market through licensed individuals in the real estate industry are advertised. That database sends out to third-party websites like Zillow and Trulia, Realtor.com. We also have our own personal website that I'm going to show you that can really help you to get up-to-the-date information. That way you're the most informed buyer possible. And then communication. We all communicate within to each other. Reason why we love working with Jessica Enfinger and the Powerhouse team is that they have very, very good systems and structures on maintaining communication, make sure that we are hitting our deadlines. We want to make sure that there's nothing that can inadvertently get in the way of you purchasing the house once you are under contract. And we want to make sure that all the steps leading up to that, you are informed, you're educated, you know what to expect. And it's our job to be your trusted advisor throughout this process. We want to make sure that we're listening to your needs, we're identifying what you want, and we're helping to put together all the pieces in a satisfactory way. And then, of course, you're hiring us because we have negotiating skills to help you get your foot in the door. It's a very tough market out there, and it can be interesting to navigate. So you definitely want people with experience on your side, both when you're getting ready to purchase, just in the beginning stages of getting your pre-approval together, and then also once you're out there and beyond. We're going to be here for you all step of the way. And then Exit Realty gives away a portion of each transaction to charity. So every single time we are out there working with buyers such as yourself, we are also giving back to the community. We take a lot of coaching and we try to stay on top of the market the best we can to also anticipate what's going to happen. That way we can properly advise people of what to expect. So just a quick overview of the whole timeline of purchasing. We're here at that very first step where you're going to talk to real estate agents. You're going to kind of get an idea of who you want to work with, who's you're going to be your advocate on your side. The next step, number one after that, after you decide, hey, I'm ready, is to talk with a mortgage lender. And we're going to give you all the steps and tools on how to do that in a little bit. After that, we're going to sit down and identify specifically what are your needs and come up with a plan to get out there and start looking. We're going to take a look at possible properties that may be a good fit. And then once you're ready, we are going to put together an offer to purchase. If that is accepted, if we may need to negotiate a little bit back and forth, but at that point, you'll be under contract. Once that begins, then the fun stuff happens. You have your inspections, you have your appraisal, there's any requirements from the bank for the property, we'll kind of navigate that process as it comes down to it. If everything goes right, the lender's going to give you a mortgage commitment, and then we get to go to closing and you get to move, which is always the goal. I'm going to let Jessica go over these items, things like closing costs and what to expect from your budget. But once you are ready to move, we kind of help you with this, navigate as well the moving process and get you some timelines, get you resources that may help you out, and then kind of point you in the right direction as far as if you have any utilities or contractors that you need to hire, we'll help you out with that as well. Some tips for moving once you are ready. And again, we try to get you all the way through to the end of the process with as much information as possible. So we do give you a heads up on when and who to call for certain things. Some last minute moving tips for when you're ready. And then what I wanted to show everyone is we have built this really great resource for everyone. I was saying how third-party websites they pull from our MLS, our multiple listing service, which is that database of all of the listings that are currently available, as well as past sold listings. So our website updates every 10 to 15 minutes from that MLS. So you're getting super accurate data. If it is available for us to go and see, you're going to know about it. And you can also get notified as soon as properties hit the market. So what you want to do is you want to go to MarylandRealEstate.INFO. And I am going to, here we go. It's MarylandRealEstate.INFO. We have some featured listings featured up there. You can do your own search by map if you have certain criteria that you're looking for. You can search by community if you're looking for a specific type of property or a specific area. We have some pre-done, just go ahead and click on what you're looking for in Anne Arundel, Calvert, Prince George's, St. Mary's. We do work up in Baltimore County if that's what you're interested in. And then a couple of just quick services that we do offer as well. We do a lot of work with first-time home buyers to help get people get educated and get them into their very first home of their own. But there are also other avenues to home ownership. You may be a better fit for a rent-to-own program. Those are very specific programs that have different eligibility requirements, and they may not be the best fit for some people, but it's an option for housing if you need it. We also have a preferred move-up buyer program if you have a home to sell. That can put you in an even better position to be a buyer. And then if you do know of anybody that has a home to sell, especially right now, we have a lot of people in forbearance, a lot of people that have gotten behind on their mortgage that just are not paying. If you know of anybody that's struggling, send them over to us. We can have a conversation with them and see if we can help them either save their house or at least get them out of the situation without owing thousands of dollars. You're going to see some contact information for me and Sam and Holly. So if you ever need to reach us, it's an easy way to get a hold of us. We have some great testimonials from past clients, and I do definitely encourage folks to take a scroll through here. There's some very kind words, but they're all truthful. They're all people that we've had a really great experience with working with. We've been able to help them accomplish their dreams and their goals of home ownership. And you can just see from some of the words, like they're just so over the moon about being in a home of their own that we want to share that with everybody. Also up here, you're going to have a heads up on other events that we are hosting. And we have a regular blog where we post some more information about how to navigate this home purchase process, what we can offer, as well as some recent news or updates that we may want to share. So about that, I am going to turn this over to, whoops, where's my, how do I stop sharing? There we go. So I'm going to turn this over to our credit restoration specialist, Aiden Coughlin. And Here we go. She's going to give you a quick overview of how you can get yourself into a position to be eligible to qualify for a mortgage. Sometimes people have, you know, a little bit of homework, as I referenced earlier, to do. She's going to explain a little bit more about this program that we've partnered with United Credit Education Services, who's been really invaluable. I've personally used them. Sam has personally used them. They're really great for cleaning up your credit items and getting you into a much better position to qualify for a better interest rate, lower monthly payments, everything that goes with that. So hold on one moment. I'm going to let Aiden step in.
Aiden Coughlin, and I'm here with United Credit Educational Services. My background is in property management, so I'm here to help you all start your journey in buying a home. So this company was founded in 2004. It's headquartered in Farmington Hills. It has a unique collection of services carefully selected to provide financial protection and opportunity. A completely debt-free company that has helped thousands of people. Why is this more important than ever? The biggest difference between financial success and financial failure is how well you manage your money. Most think it's how you master your money, but you need to be able to manage your money. We were not all taught financial literacy in school. It takes a lot of time to change your thinking and to be able to understand financial literacy. Here are 5 shocking facts that you didn't know about financials. Americans are drowning in over $1 trillion in credit card debt as in March 2019. Over 560 people have no rainy day funds. 46% of baby boomers have babies have less than 10,000 saved for retirement. 40% of millennials have spent money they didn't have to keep up with friends, and most keep it a secret. 43 million Americans have a credit score of 599 or less. Poor credit can fill people with anxiety, embarrassment, frustration, fear, and confusion, but it's really nothing to be ashamed of. It happens to great people all the time. In contrast, having a strong credit score leaves people feeling confident, excited, and abundant. Ultimately, a good credit score opens up possibilities to create the lifestyle you desire. Good credit makes it easier to get new houses, new cars, low interest rates on credit cards and loans, higher limits, contracts without security deposits. The UCES is committed to helping individuals and families build, organize, and protect their financial future. 1 award-winning protection plan, 12 life-changing products. So this credit restoration company offers budgeting, credit restoration, credit builder, credit attorney, credit monitoring, debt payoff, financial lockbox, identifying, monitoring, net worth, saving goals, will and trust, and YFL, Family Mint, which is to help out our youth, and learning about these services as well. To build your financial future, you will need to understand credit restoration and how that works within this company. The credit services can assist you guys in challenging the credit bureaus to remove inaccurate, obsolete, and erroneous items from your credit report, which will help you restore your score and maximize your financial opportunities. Our credit builder will help access your credit report in easy to understand online format to help you use the financial resources a lot easier to increase your financial potential. Our credit monitoring will help you track your credit in an easier way using an online system that will alert you. And it also help you organize organize your transactions within your credit as well. Credit attorney will evaluate your case and difficult to remove inaccurate items on your credit report. They will help you clean up your report in which you may be entitled to compensation. So a lot of people wonder how your credit score is calculated. So this is how it does break down. 35% of it is payment history, on-time payments versus delinquencies, which is last 24 months, which are way more important. Other 30% are capacity and amount owed, which is percentage of credit limits available. 15% is length of credits, how long you've had your accounts, how long they've been open for. 10% is new credit inquiries, which is the number of inquiries and new accounts you've opened within the last year to year and a half. And then another 10% is the types of credit, which is your installment loans versus revolving loans. To organize your financial future, it is really to understand these 4 tools we use within this company. Well, and another 4 right here. Exclusively for UCES members, you can earn an average of 5.4 cash back on every purchase at over 260 national retailers, restaurants, and travel brands. Your travel club. So with this company, you'll be able to earn travel rewards. What is it? The future prescription savings. So you can download your Clever RX app or use your Clever RX card to unlock exclusive savings. Credit My Rent, which helps you build credit the smart way. It's an online app to make sure you pay on time, make sure you have positive payment history, and instantly add 2 years of rent payment to your credit report. This is a UCES protection plan roadmap, which I advise everyone to look at if they're looking to buy a home and looking to build their credit. It shows month 1 and then month 2 and 3 in one section, 4 to 6, 7 and 9, 10 to 12. And that's just going to help you stay on your finances, establish your family security, and make sure you're on the right track to buy a home. So this is the app, the free UCESPP app that I definitely recommend getting. It's just going to help you keep track of everything and make the process a whole lot easier. So you definitely want to take control of your financial future today. So I would definitely advise getting this app with this company we work with. It's $188 for one time. The setup fee is included in that, and it's $89 monthly subscription. And that's all the 12 products and services you get within signing up for this membership. The customer referral program gives you the opportunity to get your UCES protection plan for free. We recommend it to potential new customers to your enrollment agent. If 5 of your referrals enroll, you may get your next month free. So the youth financial literacy, it helps provide financial literacy lessons for all people under 18 across the U.S. There's scholarships for it as well. And then here are a whole bunch of
quick transition there. All right. So Aiden was able to give us a quick overview of this partner program that we've been working with United Credit Education Services, UCES. And it's just a great program for getting you back on track, removing some erroneous items, some older stuff that may not help you to purchase a home. So with that, I would like to hand this over to Jessica Enfinger for our in-depth introduction to how to get mortgage ready, how to qualify for a mortgage, what's your budget gonna look like, what do we do just to get out there to be able to shop for a home.
Awesome. Thank you so much, Jenna. Did you give me the ability to share? Yes. Okay. Nope, I don't have it yet. So as Jenna said, I'm going to be going over a few things about being a first-time home buyer. And I did have a little bit on credit as well, but that was, definitely a lot of information about credit. So I won't stay on that too long, but I definitely want to get into, just any questions that you guys may have, because sometimes you may think your credit's a lot worse than what it is. So, you can start with us and we can see where you're at. And then if it's needed, then you can go over to something like what Jenna and the team offer. The Maryland Real Estate Info Group is, they're definitely there to help you and provide you with all the resources. And one of the things they will tell you is, like you saw in Jenna's first slide, there is, when in regards to the timeline, that after you decide that you want to, purchase a home and you're ready to take that step, then you're going to reach out to us and we're going to help you here on the lending side kind of evaluate where you are and help you to make sure that what you're looking to qualify for is you have everything in front of you so you know what to expect. So basically, sometimes how I try to explain to people is you may think that you have a certain price point in mind, and we want to make sure that you're comfortable with a certain payment. So that's a lot of times what's the first question is that we ask you from us as a team when you contact us is, what is it that you're wanting to spend every month? Because we want you to get in a house and keep a house and be comfortable with that payment, as does the Maryland Real Estate Group. So Jenna, let me see if I can try to share now. Nope. Okay. Let me see if it'll let me. Just booted you off, right, Jenna?
Nope, you're good.
You see it? Okay, let me get my view here. And then we'll go. I'm not quite as fast as Jenna. She knows how to do it really fast. Okay, so this is it. So someday you want to buy a house, and we want you to turn that someday into today. All right, guys? So here we're going to go and we're going to talk about reasons why people tend to wait, because a lot of times, maybe, you've got all these different things going through your head. We help people that are from, 18 all the way up to 80. Yes, 80 years old. We have helped first-time home buyers at the age of 80 buy their first house. And that's okay. Really, there's never too late to get started. So I just had an alert come up. So sorry, it distracted me. So it says here, so one of the things is one of the main fears is that you won't qualify to buy a home right now. Credit concerns, you're working from home, or maybe you had some time off of work.
We can't see your screen. It says you started screen sharing, but I can't see it.
It says it's paused. Your screen sharing is paused. Okay, let me try again. Screen share again. Sure. Is it better?
It is.
Okay, sorry. All right, so a few technical difficulties. It's not bad. Okay, yay. Thank you, Jasmine, for the thumbs up. So basically, guys, this is what it is. So your fears, I'm gonna go fast. So, and I can talk fast. So if I go over things too quickly at the end, we're gonna answer some questions. And then always, I know there were some questions that people have previously emailed into the team, and we're going to try to get to some of those if we can by the end of the day of the session. So we'll just keep it moving. So the fears, like I said, you're afraid that maybe you won't qualify, that you've had some time off due to coronavirus. Well, you won't know for sure until you speak to somebody. And a lot of times I find with people that it's because of the fact that they've been told no somewhere along the line is why they're afraid to take that first step, step out and actually try again, or even try, period, because they were said, oh, well, because you've had some post or problems with like a bankruptcy or a foreclosure, no, sorry, not a foreclosure, but like a repossession or something like that of a car, you're not going to be eligible to buy. And a lot of those collection people that call you all the time say, hey, you're going to, if you don't pay us like right now, we're going to put this on your credit. You're never going to be able to buy a house or do anything like that. Well, they're lying to you. That's not true. So you really, a lot of the debts and things do not need to be paid off when you're going to purchase. And we're going to cover that a little bit. So definitely that's one of the biggest fears we hear is that I'm not ready because I think I have issues with my credit. Or I've had a gap in my history with my job and I'm concerned about that. Another fear is that should they wait because the market gets better or the prices come down? Well, there's never a bad time to buy the right house. And, one of the things that we really want you to focus on here is that, if you're paying rent and you've been paying rent, for even just a year, 2 years, you're throwing your money away. So all you're doing is making your landlord rich. We get on average in this area, anywhere from 5 to 10% in value over a 10-year period of time. You can look it up on the internet. It's not something, and it's definitely something you should look at and see, but on average, we're getting 5 to 10% equity over a 10-year period of time. So what that means is, yes, if you're going to buy a house and want to sell the house next year, it may not be the best plan for you because you have to recoup some of that cost. But you could always rent that house out if for some reason you needed to move or something else came up. So definitely, what you're doing right now when you're renting, though, is you're throwing money away and giving it to your landlord and making them rich instead of investing in yourself. So it's never a bad time to buy a house. And if you keep waiting for the prices to come down, then what's going to happen is the interest rates will go up. So as prices come down, you're going to, and they don't really come down. They normally are going to stabilize and grow slowly in this area. We have a lot of industry because we're a transit area. So people are always moving in and out of this area. So we generally don't have the problem with us losing value like you would in some areas that maybe don't have as much industry. So another fear is that they don't have the money for the down payment. So many different down payment programs, so many different options when it comes to that. Lots of ways to work with your savings, with retirement funds, state programs, local programs, grants. There's all kinds of options. So that's why we're here. You got to start with us so we can give you that information. And then the last fear is that, and this is one that I hear, honestly, quite often, which is that I can't afford to buy my dream home. Like you want to get into the biggest and best and baddest home. Right now you're staying in a 2-bedroom apartment with 1 bathroom and you want to move out into like a 5-bedroom house immediately with all stainless steel granite countertops. Well, right, you got to get something. You got to start somewhere. So the best way to get closer to your dream home is to actually buy a home, get into a home, because that home will grow in value for you. And then you will sell that home and take that equity and then go buy the next house. But if you just keep waiting to hopefully, because you think you're going to be able to, you have a certain idea in your mind of exactly what you have to have, you're now, again, remember, you're continually paying this rent and you're making your landlord rich. In the meantime, if you would move into something that you bought that maybe was a transition home, that house can get you ready for the next house. And again, that house does not have to be the final house. And that's where we see a lot of people get, hung up on the fact that they think that it has to be the biggest and the best. It does not have to be that way. It definitely needs to be comfortable. And Jenna and her team, they all work together to make sure that what your needs are met and that they do the best they can to find you all of your wants as well. But you want to make sure that too, my side of it and our side of lending is we want to make sure that that payment is comfortable for you. So your first experience of owning a home, you're not worried about, am I going to be able to make this payment work? So we get into, what determines the loan program and interest rates on a mortgage. So I jump straight into that because, interest rates come up. People talk about this a lot. People talk about the different programs and how are these things affected. So I like to jump in here and just kind of go, what creates a credit score, basically, risk factors that are reviewed by what creates an interest rate, which are risk factors that are, given to what we use to make sure so we can see what your interest rate is going to be. So number one is going to be your credit score. And we're going to go over that just a little bit. But another thing is we look at is occupancy. Are you going to own or occupy the house? Or is it going to be your second home? Or is it an investor, home, which means you're going to be renting it out? Do you have stable income? We look at your debt to income ratio, which I go over a little bit here for you as well. So you can kind of understand that. But those things can also determine, whether or not you're eligible for programs. So down payment assistance programs are driven by the credit score and, also the location of the property where you're wanting to buy or where you're wanting to live, because a lot of the programs are, based off of the county or the state that you're, looking to purchase in. So those things are all come into play as well. So the income portion of it does as well, because with the state money, they want to make sure that your debt to income ratio is, at a comfortable level. And it sometimes is a little bit less than what it would be even if you were to qualify without using the down payment assistance program. So the loan to value means down payment, basically, how much skin do you have in the game? Are you putting 3% down? You're putting 5% down, 10% down? These things can change your interest rate. The amount of money that you put down can sometimes change your interest rate. And, with programs, there are certain programs where you can put down 5%, and the funds that would be given to you can be used to like pay off student loans, for example, but they would require the 5% to be put down versus like a 3%. So that's why these things come into play in regards to what programs are available out there for you, as well as the interest rate. And also the property type, single family home, townhome, and condo. Those are all different property types, and those can all have a weight and which kind of financing you'd be able to use. So definitely, one of the biggest things that I hear from clients is that they think, okay, well, the Fed rate is dropping, or we hear what the Fed rate is, and they think that the Fed rate is, the example of what the interest rate is. And the mortgage interest rate does not go off of the Fed rate directly. So the Fed rate is just the money at which the banks are lending money to each other. And the interest rates are determined by other, indicators in the market. A lot of times, like the 10-year bond and things of that nature. But it can also be just the, like right now with the gas scare, or any of the things that we've had during, coronavirus. Those can make our markets jump up and down with interest rates, and interest rates change every day. So what we try to do as a team here is we try to prepare you for, what we've seen recently in the market for interest rates, and we give you an idea what that payment would be. And then once you get the contract ratified with the Maryland Real Estate team, then Maryland Real Estate Group, we would go back and make sure that we tweak all those numbers for you before we get your interest rate locked in. So that's just a little bit on loan, programs and interest rates. Credit score was already covered by Aiden, so I'm not going to get into it too much, but I will kind of give you some specific numbers real fast. Really, if your credit score is at least I tell people if it's at least a 620, then we got something we can work with. If you're getting into that 580 credit zone, then we're going to probably get you over to, the Maryland Real Estate Group's, resource for credit repair, because we want to make sure that when you do get your loan, that you're going to be able to get the best rates possible and be eligible for programs. Most down payment assistance programs are going to be, you have a credit score requirement of 660. So even if you come to us and your credit score is not quite ready yet, what we will do is we will do what's called a credit simulation with our credit scoring companies. It's very similar to what you can do and you see on Credit Karma or on, CreditWise from Capital One, but it's actually accurate. So and I say that because this credit scoring company is different than the TransUnion, Experian, and Equifax. Those three companies are just informational bureaus. Those are not actual credit scoring companies. They give you an estimate of what they think your score would be based off of the information that they've gathered together for you. So when you come to us as a lender or even like a car, dealer, we're going to we pay a third party scoring company, which is either going to be normally Kroll, Universal Credit, and those companies are the two of the largest ones, and Credco. And those companies give us a score based on those three informational bureaus, information that they provide over. So when we get a score that comes in at 620 or less, we are going to do what's called a simulation with our credit scoring company before we send you over to be repaired or even have somebody take a look at it, because it's possible it's something as small as like paying down a credit card or putting a balance on a credit card that's a zero balance. I've had people that had a credit score of 620 and then they had zero owed on their Capital One credit card. And when we did the simulation, it came back and said, put $10 on the credit card and their score is going to go up by 90 points. And they did. And then we get them to give us a letter from Capital One, and we send that to our credit scoring company. And it's within 48 hours. It's called a rapid rescore. your score comes up to what they said it was going to be. So a scoring company can, if they give you that simulation, they give you the odds of whether or not it's going to work. And that's where we try to always get that done for you before we refer you over to a credit repair company. Because, and again, even if your score is a 620, we're going to always try to at least do a simulation to see what we could possibly do to get your score up, just in case there's like something that's small there that would require just a little bit of money, or maybe no money at all. Sometimes it's just getting your name removed as an authorized user from a credit card and your score would go up. So we look at those things for you to see what we can do, because we want your score to be as high as possible, to be able to get you the best programs out there and give you more options. Now, do we break down every single option for you? You know, we try our best to kind of evaluate based off of where you're looking to live and, you know, what you told us in our initial consultation of what your goals were for purchasing. And we will kind of come to you with normally the top 2 to 3 programs that will work for you. So this is just a little bit about credit. The next thing is of course, you know, again, Aiden already kind of went through a lot of this stuff, is how do you know you have good credit? Do you pay your bills on time? Are your credit cards maxed out? Do you have, you know, are you signing for somebody else's cards? You know, you have a long history of credit, you know, or a long credit history. And, you know, so these things are all things about ways you can kind of do a credit check-in to see if you know what's going on with your credit. And again, if you haven't checked your credit in a year, you definitely want to get with us and let us take a look at where your credit is if you're thinking about buying a home in the next year or so, because it's a starting spot. And a lot of times people believe that their scores are worse than what they really are. I've had people tell me that they've gone on and see Credit Karma and their scores they're seeing is like, you know, 560. Then we pull their credit and it's actually a 618. And then adversely, I've had people tell me that my score is like a 690 and we've pulled it and it's a 625. So it's very important, because those scores that are given to you by Credit Karma, again, are not your accurate scores. Those are an estimate of what Credit Karma is thinking your scores are going to be based off of the information that they're receiving from those 2 credit bureaus that they receive their information from. Okay. So some things about mortgage, you know, and how to bounce back. Because a lot of, again, one of the things that I was talking about in the very beginning that we run into is people that have had some sort of derogatory event happen in their life that has made them not be able to purchase, or they in their mind that they can't purchase. So this is just a quick little overview for you to kind of see that even if you had a foreclosure, you know, you can still buy a home. You don't have to wait 10 years to buy a home. And another thing I'd like to point out to you is, like, if you look at the bankruptcy, look at bankruptcy right here, where it says chapter 7 or 11, 2 years, right? So 2 years. Up here it is 4 years, but it's not that 10 years or that 7 years that they're always beaten into our heads. Like, you got to, you know, if you have a bankruptcy, you can't do anything for like, you know, 10 years. The truth of the matter is it does stay on your credit report for 10 years. And we have to have documentation to prove that, you know, what happened with the bankruptcy. You have to tell us what went on with that. But that's all about finding the right partner and having them help you work through that, and answering and doing an explanation letter of what took place to make the bankruptcy happen. But then you see here, you can absolutely get a loan after 2 years from the bankruptcy, a chapter 7, which wipes out everything. If you, for some reason, maybe got affected and this is not going to be your first home, maybe you had to have a short sale, maybe you had, you know, a foreclosure a while back. This right here tells you the different loan types, but it also tells you it's a 3-year period of time for, you know, an FHA loan. On a VA loan, it's normally a 1 year to 2 years on a short sale. So, and, you know, definitely, you know, when you're looking at the conventional loans, those are going to be a little bit further out when you've had a derogatory event, but you can still see that it's not 10 years or any craziness waiting for that. And honestly, like, the conventional loans are not typically used for first-time home buyers. Most first-time home buyers don't use a conventional loan. The majority of our first-time home buyers are using a government loan in some way, which is either going to be a VA, an FHA, or a USDA loan. And a lot of times they're accompanied by some sort of state assistance, or they're using funds from their retirement, like a loan against their retirement funds. So it's not going to be normally a conventional loan. So how do we get this whole thing started? I'm going to use this little link right here. And this link right here, which Jenna can probably put into the chat, and she can share with you guys later on after, you know, when she does a follow-up email for everyone. She'll send this out to you, but you can just go right there and you can just get pre-approved. And what happens is you'll send in your little application. It's not even a whole lot of information. We're not asking for social security numbers or anything right there. We're just getting a basic information from you so we can reach out to you, and someone from my team or myself will be reaching out to you. and we will talk to you just a little bit about more, what you're looking for and what your timeline is. So that's how you do that. So bringing that, so with that, I am going to now just quickly take a check-in and say, what is the difference between a mortgage pre-approval versus a pre-qualification? And yes, that's me. Okay, so, but what is the difference? The difference is that a pre-approval means we've received all of your documents in. We've pulled your credit. We've received your pay stubs, your W-2s, your tax returns. We've seen your bank statements. We've got everything ready. And so we can put out a pre-approval letter for you and send that to, the, Maryland Mortgage or Maryland Real Estate group. So that way one of them can go ahead and put their offer on the property for you that you're interested in. In this market and in most markets, sellers are not going to take a pre-qualification. A pre-qualification is like when you call up to Navy Federal and they run your credit real fast. And basically, like, I'm a member of Navy Federal Credit Union as well. But what all they do when you call in for them, you're not talking to a loan officer. You're not even talking to a loan officer assistant. You're talking to a telemarketer, basically, who is taking your information, typing it in and going, okay, yep, we see you. Yep, okay, we see your credit score. Yeah, we can do a 620 credit score. They don't even know what program you're going to be in. They're just going to send you a letter out. And it's based off of the information that you've given them over the phone. They've not verified anything. And so it's very hard for a realtor to get your contracts accepted when you're working with a pre-qualification letter, because it's a very dangerous situation for you as the consumer as well. I say that because we don't want any surprises in this process. Again, doing this for 18 years, I can tell you that, one of the things that I've heard so many nightmare stories about is that people saying, like, from other lenders and other situations, that they were pushed into signing things and buying something more than they wanted, and they didn't know what they were signing, and they had no idea what the payment was going to be, and they had to bring extra money to closing. And that is not what we're about. So the Maryland Real Estate Group absolutely makes sure that you know all of the information. And, between Holly, Sam, and Jenna and I, we all work together to make sure that you know what's happening every step of the way, because we believe as a group that birthdays are for, surprises are for birthdays. I had that almost got it. I almost got it. It's my tagline. Anyway, so surprises are for birthdays, not for mortgages and not for buying your house. We don't want you to have any surprises here. We want you to know what's going on. And the reason why is because when it comes down to it, we know that it's stressful for you. We do this every day. I'm not a teacher. I wouldn't know. I have 4 children, but I don't really particularly want to be with other people's children. So, that's just not my deal. It's not what I do. I love them, but they better be good. And God bless you if you're a teacher. Thank you for your service. Because I'll tell you, it's hard. But what we do, we make sure we know what we're doing to help you. So that way you don't have to worry about this side. You can go ahead and go out there and teach our children, because I don't know how to do that. This is what we know how to do. And we want to make sure you're comfortable with that. And that's what's part of picking your team. So again, the pre-approval is really what you need. And that's all that we do. I do not offer a pre-qualification. We do not just pull credit. If you pull your credit and you have a 800 credit score, I still don't care. I'm not going to give you a letter unless I receive your income documents and I can review your income with you. And it's for your protection, because you don't want that surprise. You don't want something coming up being like, hey, I know my salary is $60,000, but wait, I didn't realize that because I had a small business that I took a big loss on for my tax returns, I really don't have that income. And now I don't qualify for the house. And I've been out here putting money out for my home inspection, wasting my nights. No, you don't want that. You want to make sure that we've reviewed everything to make sure that when you find that house, that you go out and you have the fun of finding that house. And you don't have to worry about when you find that house that it's going to be like, oh, now we find out for sure whether or not we're going to be able to get it. When you go find that house, if we've given you a letter, it's not a when you're going, or it's not a if you're going to get it, it's a when you're going to get it. It's going to happen. So that's how we work together as a team to make sure of that for you. All right, so I'm going to move on faster. Stability of income, I'm going to cover really fast here for you, and loan to value for the down payment, just these 2 sections. So stability of income, what's included in my debt to income ratio? We get this question a lot because working with down payment assistance programs, I have the unfortunate task to tell people a lot of times that because you have student loans or you have too much, in the way of debt, that, you are not eligible for the programs. And they go, well, what do you mean? How come why is that even happening? I don't have very many bills. My student loans are all in, forbearance, or, I don't even have to pay payments on them yet. or, you know, my credit cards, I pay them off every month. And yes, that's great. But here's what happens is that's why we need to take a look at it, because that very well may be the situation. And we can help you, but these items are included in your debt to income ratio. What that means is money coming in versus money going out. So you see at the very bottom here, you add up all the monthly debt payments divided by your gross monthly income times 100. And that's how you can figure out your debt to income ratio. And on most all programs that for down payment assistance, you're going to be capped at 45% total for your housing and all of these other items that are up here. So your credit cards, your car loans, student loans, judgments, alimony, child support, any of that stuff. And then we couple that with the new house payment. And that gets to put in with the house payment too. And so basically, you know, what does that mean to you? People go at this point, sometimes you're like, wow, I just can never do it because I have too much bills I have to pay. We're not counting your insurance that you pay to, you know, for your car. We're not counting, you know, anything that's got to be like your health insurance. We're not counting your cable bill. We're not counting your electric bill. That's not all being counted into this. This is just what's on your credit report. This is just what we see there. And then also, of course, too, if you do have child support and alimony, that gets counted as well. But, you know, it's not as bad as it sounds, because if you think about it, what is 45%? So if you're making $60,000 a year, and I'll just give you an example, that's going to be $5,000 a month. So $5,000 a month times, you know, 45%, you're looking at $2,250 for all outgoing debt, including car payments and everything. So that gives you plenty of room to have a $1,500 a month payment, you know, for your house, and then still have another $750 in, you know, credit cards, cars, or student loans. So when it comes to this is why we like to go ahead and get things checked ahead of time, because again, if there's something that, like, maybe you do pay your credit cards off every month and they're just paying them at the wrong time. So we need to have you call in and talk to your credit card company about the fact that you've got a zero balance, so we can update that on your credit report, and that'll lower that down for you. So that way your debt to income ratio will be lower. Same thing with student loans. Student loans don't have a payment that populates on your credit report. Then normally for most programs, we have to count 1% of the total balance. But if you are what we can do for you, and we have done this a lot, is we have you contact the company and get them to put a payment associated with it. And a lot of times is a lot less than the 1%, and that can help you as well. So my point about debt to income ratio is, don't let it, you know, scare you off, because it can even be a lot higher than the 45%. If you're using a program, we can go up to 55%, sometimes 57%. And if it's VA, we don't even, which is a VA loan is a loan by, you know, for military personnel, veterans. And on those loans, you can actually go up to even higher. But we do not use those we don't want to push your loan to anywhere outside of your comfort zone. The only reason why we would take your debt to income ratio any higher is maybe we've had in the past people that have two people on the loan. One of them's got a good credit score, or two people are going to move into the house. Only one of them go on the loan because of the fact one's credit score is not ready yet. So we know there's going to be two people living there. And sometimes, you know, we would take the debt to income ratio a little higher for you, but then you would not qualify for a program. So again, that's where, like I said in the very beginning, we evaluate all of this stuff for you after you give us your documents and send everything in for the pre-approval. My team and I will review everything, and then we come back to you with, here's an option with down payment assistance, and this is your maximum purchase price with down payment assistance. And this is what it would be if you didn't want to use down payment assistance and you wanted to bring your own money to closing. So that's in essence why debt to income ratio is important. And you probably hear this a little bit when you run into looking at cars and stuff like that too. All right, so down payments. What is down payment? Where does it come from? It's based on your pre-approval amount. It's based on, you know, it can be as low as 0%. So USDA and VA loans are 0% down. And then you also have programs that are 3% down, 3.5% down, 5% down. Where does this money come from? I already said a couple times, we've been talking about down payment assistance programs, but it can come from savings. So money that you saved in your bank account. It can come from a gift from your parents or from a family member. it can be a loan against, your retirement fund. And that does not get added into your debt to income ratio because it's a loan against an asset. So that's one of the best places that we see people get this money from. People don't realize you don't have to cash out your retirement in order to buy a home. You're taking from an investment to buy an investment. And by doing that, that loan can be normally amortized with your employer retirement account over like a 10 or 15 year period of time. So very little is coming back out of your paycheck. And, what happens is you're avoiding paying a penalty that you would if you had done a withdrawal. So this is a really great way. And a lot of times people utilize this because you can still then get the best interest rates out there instead of having to use a program from the state where the interest rate might be a little bit higher. And of course, the down payment assistance funds, which come from the counties and the states and other employer, match options sometimes. Those are obviously still an option for you to get your money for your down payment. So that's pretty much it. I'm going to just say, lastly, here's what we do to avoid shooting yourself in the foot. Do not, when you're trying to buy a house, do not start moving all your money around and be like, oh, I got this money at the house that I need to just go put into the bank. Don't do that. Call us and let us check it out. If you got some money at the house or something's happened, you're like, hey, and that's what happens a lot. People are like, hey, I'm about ready to buy a house. All this money that I've been saving, or I sold my motorcycle, I got the cash here. Don't do that. Want to talk to us. We'll tell you how to put that money into the account, because everything that goes on, we have to see how it moves. And there is no going, oh, well, I thought that, it wouldn't matter because it's only $3,000. It's not $10,000. No, anything that's, generally 1% of the loan amount that you're getting. So if you're buying a $300,000 house, if it's $3,000, it has to be checked out, or less, or more. And then same thing though with, if it's a pattern of multiple times going in, we have to check it out. So just let us know, because we verify all these deposits. Number 2, selling of assets. You see how it says right there, if you're going to sell something, and that's another way that people sometimes come up with money. And I deal with that a lot. People selling either, like I had a guy today talking to me about selling his boat. That's great. He's just going to have to sell the boat and then give me the title and show me that he done it. So that way we can prove that that boat was sold, and not the fact that he's just getting a loan from a credit card advance and then dropping into his bank account. So that's why they have to do that. It's not because they're thinking so much that it's coming from illicit funds or drug money or something like that, which people tend to say like, oh, that's what they're thinking. It's not what's happening. They're worried more about your debt to income ratio and the fact that you could go run a credit card up, or that you could take a loan from somebody that could have an interest in the property and then try to foreclose because you didn't pay them back. So that's why we have to watch the money. And again, I always try to explain to people, there is no common sense in banking. There is no common sense in banking. Let's not try to make common sense of it. That's what we're here for, is to help you understand that when something crazy comes up, we help walk you through it and go, I know it's silly, but yes, we have to make sure we watch this money move from this one to this one and this one. And we explain that to you so that way you don't get stuck by accidentally doing something because you were using common sense, because trust me, a lot of times the underwriters are not. All right, so then we're going to look at last thing is, don't change jobs. You can obviously change jobs if you need to, but you just need to talk to us about it. But if you're changing jobs, don't like, okay, right now I'm getting ready to go buy a house, I'm going to go and change my job completely. And I was, for the last 10 years I've been in daycare, and now I'm going to go and start and being an accountant, or working in an accounting firm. If you're going to do that, you got to be able to prove what happened in your, that you were educated or something changed for you to be able to change those jobs and still count that income as stable. So a lot of times you can, but we just have to talk to you about it and make sure that we are going to be able to trace it up. So that way we can count that new job. People also think that because you haven't had a job, like if you've not worked in, let's say you've only been working for 6 months, like for your younger people, they think, or they just got out of college and they've only been working for 2 months, they got out of college 2 months ago or something. They think they can't buy. That's not true. If you've been in college or you just got through with a career training field or a class or something like that, you absolutely can buy after you've started your job and have at least 30 days of pay stubs. So there is a possibility for you to buy, even if you just got started in the job. It depends on the type of job, and it depends on what the history of was, of your job before. Don't apply for other credits. Please do not go out and buy a car if you're getting ready to buy a house. That's a really important factor. A lot of people do that. A lot of people buy the furniture before we have the house. We need to get the house and then we can go get the furniture. Okay. I have somebody tell me, oh, there was just this really good deal on Babcock, Jessica, and I just needed to go buy it because I had to get it. And I put it on hold. Don't worry, I didn't do nothing. I just put it on hold. They're holding it there for me. Well, guess what that does? That changes my numbers all together, because now we can see when your credit has been pulled, and then we get an alert. And when we get that alert, we don't have to rerun your credit every time you're going to put a new offer on a different house. Your credit is good. Everything is good with us for 120 days. But if we see alerts come up because you've had your credit run, or, you know, we're going to have to ask about it. So like if we see a credit pull by Mercedes-Benz, yeah, we got to figure out what's happening. We got to ask, because that could change. If you get in a payment from Mercedes-Benz, then that could change. And then of course that could obviously change your credit score and could cause you to not qualify. So definitely, if something happens and you absolutely have to do something with your credit, just let us know and we'll be happy to help you with that. And then obviously review your credit report, which we already talked about. You need to make sure you're getting that done at least once a year. And then finally, this is who we are. That's me on a better day. So, I'm laughing because but anyhow. So we are the Powerhouse team. It's myself, Samantha, Lindsay, Simone, Ashley. We are all located in Crofton. I live in Calvert County, Maryland. I my dad was in the Navy, so I moved around a lot. So lived in Florida, but I spent a lot of time in Maryland because my mom always lived here in Maryland and Prince George's County. So I am very familiar with Maryland, just like the rest of your Maryland real estate group here. And I am excited to be here and answer all of your questions. So we are different because we put you first, and we also don't keep those bankers hours. As you can see, we work into the evenings, and we're here because we know that you're not shopping for your house from 9 to 5, which is when those bankers are working normally. So we try to make sure somebody on the team is always available to get those numbers in front of you. So that way, if you're ready to write that offer on that house, Jenna, Sam, or Holly can send that address to us, and we get those numbers to you so you can review them before your offer goes in. So if you guys have any questions, please reach out to us. I hope that you'll take the time to go to the app and the link and at least introduce yourselves to us so we can start trying to talk to you and see what your timeline would be. But thank you so much, Jenna and Sam and Holly, for having me. I'm looking forward to working with you guys. Again, as always.
Thank you, Jess. Thank you so much. So before we head out, I'm going to pull this over here, and what I would like to do is give Sam, here, I'm going to change the chat settings. I'd like to give Sam the opportunity to do a giveaway. We wanted to tell people that we have, gifts and prizes. And of course, the more people, the more giveaways we can do. But Sam, why don't you go ahead and let's do a quick raffle. Oops, gotta unmute Sam.
I'm unmuted. I'm here now. We have, let me see. We have Jasmine here. Hi, Jasmine. How are you doing? I can't see you, but you can see me. So I want you to pick a number between 1 and 50. And depending on the number, it's going to dictate which prize you get. So, Jasmine, when you're ready, tell me what number you picked.
16. Got it. You got 16 she picked.
Ooh, okay. So that would be the Visa fuel card.
Yay, we need that
We
now.
all need that right now.
Thank you.
So we will get this to you.
Joining us.
I guess reach out to Jenna and give us your contact information so we can mail it to you, or you can come by the office and pick it up, or we can meet you somewhere.
Yeah. Jasmine, if you don't mind putting your email or phone number, whichever's easier for you, in the chat, that'll go directly just to us, and we'll reach out and get you your gift card. I got it. Got it right there. I'll get that to Sam for you. All right. So our one thing I promised, I wanted to make sure that everybody gets our kind of secret sauce formula here. The 6 secrets to crafting a winning offer. These are the secrets that I've been giving out to mostly just, personal clients, but we all use these strategies to make sure that, especially in this market, because it's tough, there's very limited inventory. There's a lot of competition from buyers, and we want to make sure that we have a way to make your offer stand out so that you're not just running out there and looking at homes, falling in love with something, and then getting outbid or getting disappointed because there's people just jumping all over it. So let me share my screen here to show you the website to go to. So you're going to go to MarylandRealEstate.INFO/6-secrets. And I'm going to type that in the chat box as well. That is going to give you the free download. And then if you have some more specific questions, say you want one of us to reach out to you to get started, if you need a little bit of assistance one-on-one, or if you just have a very specific question about being a buyer or seller in the real estate market, we are more than happy to chat with you. Just schedule an appointment down here, and then feel free to ask us any questions you may have. Take a look at listings that you may be interested in researching, and just know that we're always here for you anytime you have questions about real estate. Ask us anything. So again, thank you so much. And I hope everybody has a wonderful evening. We're going to be reaching out soon with to Jasmine for her prize. And I see I've got one more thing in the chat. Yes, thank you all so much. All right, everybody, take care. Have a wonderful night, and we'll all chat soon.
Bye, guys.